If you are using Supertrend with default settings, you are not just wrong, you are probably losing money. I tested more than 24 Supertrend setting combinations on Bitcoin across multiple time frames, and most of them actually failed. But one setup gave me around 296% return. And no, this is not guesswork. I wrote full Python code and tested everything on real market data. Every trade you will see is generated by code, not by me manually. If you want this code, comment for code, and I will also show you Excel proof, where every single trade is recorded. Entry, exit, P&L, date, everything. So you can verify every trade yourself. Watch this video till end to get the Excel and tested Python code for free. The problem is, most traders focus only on signals. Supertrend green means buy, Supertrend red means sell. They never understand what these settings actually control, and that's exactly why. The same indicator works for some people and completely fails for others. So before we look at any results, you need to understand what these settings actually do. What are Supertrend settings? If you open the Supertrend indicator settings, you will see two main parameters, ATR length and factor. ATR length decides how fast or slow the indicator reacts. Lower ATR values like 7 or 10 react faster and give more signals, but they also give more false signals. Higher ATR values like 14, 21, or 28 react slower, give fewer signals, but the trends are more reliable. Now let's talk about factor. Factor decides how far the Supertrend line stays from price. Lower factor like 1 or 2 keeps the line close to price, which gives earlier entries, but more noise. Higher factor like 3 or 4 keeps the line far from price, so entries are late, but signals are much cleaner. And by default, most platforms like TradingView use a TR10 and factor 3. But is that profitable? At the end, you will get the exact settings to use, and also the time frame that actually worked in backtesting. There is one more big problem with the Supertrend indicator in live market. Most people say Supertrend is lagging, and sometimes it gives completely wrong signals. You might have seen this. Indicator turns green, you enter the trade, and immediately it turns red, and price reverses. That's called a fake signal, and this is exactly where most traders lose money. But here's the interesting part. During my testing, I found a simple trick that removes a lot of these fake signals, and that is exactly what I used in my rules. So now, let me show you the exact buy and sell rules. Whenever Supertrend flips from red to green, you don't enter immediately. You wait for the first candle to fully close. This helps avoid fake signals. Once that candle is closed, you enter at the next candle open. Now for exit, whenever Supertrend flips from green to red, you exit at the next candle open. That's it. No extra indicators, no confusion, just simple rules. And for short trades, it's the exact opposite. Sorry if I took more time, but this was important. Now, let's check the results. I tested multiple Supertrend combinations across different time frames, but here, I'm only showing you setups. That gave positive returns, so you clearly understand what actually works. Starting with the 5-minute time frame, using ATR 21, factor 4, the strategy gave around 100% return. Total trades, 125. Profit factor, 1.28. Drawdown, 33%. This is decent, but not extraordinary. Next, the 15-minute time frame, return increased to around 200%. Looks great, right? But here's the problem. Drawdown, 104%, which means your account is wiped out. Even though returns look good, you cannot survive this. Now comes the most important part, the setup that actually works. On the 30-minute time frame, using ATR 21, factor 2, the strategy gave 296% return. More than 100 trades tested, profit factor, 1.71, drawdown, only 16%. This is what we are looking for, good returns, strong profit factor, controlled risk. If I had to choose one setup, this would be it. Now let's look at the Excel. You will find this file in the description. And if you want more tested strategies like this, don't forget to follow Tested Trader Lab. In this Excel, you can see every trade, entry, exit, P&L, date, everything. For this backtest, we used $10,000 capital with 6 times leverage, and total profit was around $29,670. Let's quickly understand two important terms: profit factor and drawdown. Profit factor means how much you earn for every $1 you risk. If it is above 1, strategy is profitable. If below 1, it is losing. But in real trading, after commissions, slippage, low profit factor strategies fail. In my opinion, below 1.5 is weak, 1.5 to 1.7 is average, above 1.7 is strong. Now drawdown. Drawdown means how much your capital falls from its peak. For example, 10,000 to 7,000. That's 30% drawdown. Drawdown tells you how much pain you can handle before recovery. If drawdown is too high, most traders quit. So always remember, profit shows potential, but drawdown shows survivability. Now for the 1 hour time frame, all settings failed. Overall loss. Profit factor below 1, which means this strategy does not work here. Thanks for watching till the end. Hope you become a profitable trader.